let's do one thing. Let us talk about individual stocks now that you need to watch out for in our top 10 list of stocks. First up we have on our list is Eicher Motors. Decent set of numbers coming through. A revenue growth of 10.5% is what the company has clocked in at 4,393 crores. The EBITDA has gone up 14.5%. The margins have actually improved 100 basis points to about 26.5%, and the net profits are up almost 20%, coming in at 1,100 crores. Goldman Sachs put out a report where they have a buy, and they have actually raised their 12-month target price by 4% to 5,600 on the stock, which implies a 22% upside to the current market price. And they talk about how the upcoming new Classic represents an upside or optionality, and they are quite bullish on the stock. So I'm going with green on Eicher Motors this morning. But Vamakshi is joining in to give us a quick word on ABB and how you should approach that one. Vamakshi, morning.
Well, good morning. I'm going with the green for ABB, and that is because the company reported a modest beat as compared to expectations. Revenue came in at 2,831 crores. This is an uptick of almost 13% on a YOY basis, but it has missed pole by almost 8%. When we look at the segment-wise revenue, robotics and discrete automation declined by almost 31%, but the revenue growth is largely being driven by process automation, electrification, and motion. All of these segments saw a double-digit uptick this time around. EBITDA margin expanded by 526 basis points and came in 225 basis points higher as compared to our expectations. Largely, this is being driven by positive price movement, cost optimization, steady material cost as well. Robotics and discrete automation, motion, electrification, and process automation, all of these counters witnessed an uptick in their EBIT margins as well. Net profit resultantly saw an uptick of almost 50%, coming in at 444 crores. This is nearly 3% higher as compared to expectations. Order inflow, however, was a bit subdued, saw a downtick of 5%, but the order backlog was up nearly 7%. Again, muted growth out here as well. The company also announced its a capacity expansion plan. They will be expanding its operation in the process automation and electrification business and will be making investments up to 85 crores. Overall, given the modest beat on its numbers, going with the green for ABB. Watch out for the commentary on the con call, which is scheduled at 11 a.m. today.
All right, green on that one as well. Thanks, Vamakshi, for that. Well, let's hop across to Ekta. She's here to tell us about Biocon. Morning, Ekta.
Thanks for that. Well, Biocon, I expect the stock to be in the red based on what they've reported. But it's important to note that their conference call is at 9 a.m. So the commentary might, in fact, change the course of the stock. Now, in terms of the revenue, I expect it to be flat. It was flat on a year-on-year basis. The street was anticipating a double-digit growth. Margins came in at 18.1% versus 21% versus estimates of around 21-22%. And the profit 659 crores because there was that Eris Life deal that they accounted for in this quarter. Biosimilars revenue was lower or flattish, you'd have to say, but on a like-to-like basis, it was up 11-odd%. Research services, Syngene, we know, was sluggish this quarter. Generics was down 6% as well. Other income was stronger because of the Eris Life deal. Company says they anticipate a stronger growth in the second half. I'll wait by for the conference call takeaways to get a full assessment on how the stock could perform today.
All right, Ekta, thank you very much for that. But there's more, so hang in there. We're coming back to you. LIC reported numbers. The country's largest life insurer, Yash, is here with details on how the company did. Yash, morning.
Well, Prashant, if I just had to go by what the company's reported in the first quarter, then I would certainly go with red, and that's because the company's missed what the street was baking in terms of numbers on various parameters. If I have to take you through the numbers, the new business premium was the only number where LIC reported its numbers ahead of the street estimates, but total annualized premium equivalent, it missed street estimates. Retail annualized premium equivalent, it missed street estimates. Value of new business was a miss, as well as margins were a miss. In terms of absolute numbers, total APE was up 21%, retail APE was up 13%. Value of new business was up 24%, and finally value of new business margins was up by 20 basis points. As I said, these were the negatives in terms of what the company reported in the first quarter, and hence I'm going with red. But what will be positive is the management's commentary on saying that they stick to FY25 guidance of AP being somewhere about 15%, margins being 19 to 20%. The stock has had a significant run-up in the last 1 year, in the last 6 months. Still remains to be one of the cheapest in the sector, trading at about 0.75, 0.8 times FY25 price to embedded value.
Okay, all right. Thanks a lot for that, Yash, and hope you had a good birthday evening yesterday. Maybe the remainder of the celebrations over the weekend. Well, that said, let's hop across to Manglam. Manglam, how was CONCOR?
Well, no surprises, neither positive nor negative from Container Corp. So if you look at the revenues, 9.5% jump out there. The company had reported its volume growth at around 6%, so not much deviation is reported from there as well. 11.5% jump in the EBITDA, margins largely contained around that 21% mark. The net profit grew by about 6%, impacted by some bit of profit, rather depreciation as well. You have the Exim business, which saw margins of around 20% with a 7% revenue growth. Domestic business showed a 13% revenue growth. Out there, the EBIT actually expanded by 40%, causing a bit of a margin expansion out there as well. No negative surprises coming in from the land license fee as well. For this quarter, it's pegged at around 106 crores. This compares with around 130 crores the same time last quarter. And we already had the volume update, so not much deviation from there either. So going with mild green on Container Corp on account of the mood of the market and no negative surprises coming in.
Okay, thanks a lot for that. Well, Sonal is with us to talk about Oil India and why you should be watching that one. Sonal, good morning.
Good morning, Sonia. Well, Oil India reported numbers. On a sequential basis, the revenues were up 1.5%. If you look at the EBITDA, that was up 6% as well. Margins came in at 42.2% versus 40.6%. But profits this time were down 28% sequentially. That is largely because of other income going down. Other income declined 80% to come in at 162 crore rupees versus 833 crore rupees. The conference call is at 11 a.m. today. We'll get more details about production, sales, volumes, etc. But do remember, the stock is up already 146% on a year-to-date basis and trades at 9.5 times FY26 EPS. The performance is good, but it is not as strong as ONGC, which is trading at around 4.9 times FY26 EPS. So yes, the stock could see some green, but it could see some red afterwards. A lot depends on the commentary coming in from the management as well.
Got that. Thanks for that, Sonal. Well, let's focus on SAIL then, and I'm going with red, and let me explain that to you. On the top line, it was a little bit better. The EBITDA number was bang in line, and the profitability was hit by a one-off. Let's run you through those numbers. The sales volume number were up by close to around 3%. That was on expected lines. But SAIL has grown less than what the market as well as its peers. So that's telling you it's lost market share. Then how did the top line beat expectations? Well, they're focused on their product mix. Longs as a percentage of the total mix, that's at around 37%, which is higher than peers besides JSPL. And also value-added products is more than 55%. So because of the better product mix, realizations were higher than what the street worked with. And that explains why the top line was a beat. The operational performance was pretty much in line with what we were working with. The reason I'm going with red is the debt number of SAIL has moved up. On a sequential basis, it's moved up by close to 5,000 crores because of expanded working capital as well as because of the capex that they are incurring. And that chart tells you the picture. For the last few years, we've been talking about SAIL. At some point of time, they'll start deleveraging their balance sheet. Well, the debt number today is the same as it was on March 2021. So that's a problem pocket for me. And as we know, steel prices are lower, as well as, when iron ore prices fall, some of the integrated players like SAIL, they lose their advantage. So going with the red out there, what saves them is that the global markets are looking good this morning. And also the markets appears are net short on this going into the events. So let's see how that goes.
Okay, well, MCX is also something we're looking at this morning. Vamakshi is here to tell us why. Vamakshi, over to you.
Well, MCX is expected to open higher today, and that is because SEBI has finally approved the appointment of Praveena Rai as the MD and CEO of MCX. Now, of course, her appointment is subject to acceptance of the offer made to her as well as the approval from shareholders. Keep in mind that she is a banker with nearly 25 years of experience, and in her last role, she is the Chief Operating Officer at National Payments Council of India, that is MPCI. Keep in mind that the CEO's position at MCX was vacant since PS Reddy stepped down on May 9th, and with this not coming in from SEBI, it bodes well for the counter. The overhang on the counter seems to have gone away, as the street was expecting this for a very long time. Overall, going with the green for MCX on account of this.
At the margin, there was also news which I think Reuters, the news wire, reported that BSE is essentially looking at launching, derivative contracts, gold derivative contracts, and I think on silver as well. But we'll need to confirm this with the BSE. There was a news report coming in from Reuters, so maybe more competition. So we'll have to see. But point taken. Vamakshi, thanks very much. Person at the top after some time at MCX. Well, let's talk about Cochin Shipyard. Astral reported numbers. Upasana is here with details. Upasana.
Thanks so much for that. First up, let me start with Cochin Shipyard. Company reported strong set of numbers. Revenue stood at 771 crore with an uptick of 62% on a YoY basis, and EBITDA margins also expanded from 17% to 23%, mainly led by ship repair segment. PAT stood at 174 crores with an uptick of 76% on a YoY basis. Now coming to company's key segments, shipbuilding recorded a strong revenue growth of 62% on a YoY basis, and margins stood at 17.5% versus 19.3%. Ship repair also recorded a strong revenue growth of 63% on a YoY basis, and margins here expanded sharply from 24% to as high as 43%. Next up is Astral. The company Q1 FY25 numbers slightly missed the street estimates. Revenue saw an uptick of 8% on a YoY basis. EBITDA saw an uptick of 6% on a YoY basis, and EBITDA margins saw a downtick of 20 basis points at 15.5%, while company's PAT stood at 119 crores, which was stable on a YoY basis.
Okay, thanks a lot, Upasna, for that. Well, here's a quick recap of our top stocks. Stocks with positive news flow. There's Eicher Motors, ABB, CONCOR, Oil India, MCX, Cochin Shipyard and Astral. While stocks with negative news flow, there's Biocon, LIC and SAIL.